We've got Maximilian Kunkel of UBS Global Wealth joining in right now on the show. Maximilian, thanks very much for taking out the time. Let's talk about the overall risk that is now glaring, with regards to the entire contagion of the virus bearing down on global equity market sentiment. Do you think things can get worse once we come back from the Lunar Year celebrations?
Things will probably get worse once we come back, as the market is trying to price in something which is relatively uncertain, namely when exactly we're going to see the peak in death tolls. However, if you're taking a longer-term stance, what we think this is likely a buying opportunity, specifically in emerging markets, as when we compared, for example, to the SARS episode in 2003, we are seeing that there is a very proactive stance towards containing the virus.
Mm-hmm. All right. Do you feel that aside from Asia and the rest of, in US for that matter, has started seeing, some scare around the same? The last time that this happened, when SARS took its toll between November 2002 to July 2003, India or the Indian market stayed pretty resilient. You actually didn't see much of a downfall even in the midst of the SARS scare. Do you feel we are fairly out of this and it's contained well enough for us and we're not going to see much of damage?
I think we have to put this into a broader perspective. Number one, we think that emerging markets per se are going to outperform globally this year, as the key issues for emerging markets over the last 2 years, strength of the US dollar, US real rates that were high in 2018, the US-China trade dispute, as well as Chinese growth slowdown, are all showing signs of improvement. Now, within emerging markets, we clearly feel that India is going to be one of the outperformers after a relatively lackluster performance in relative terms, for example, last year. And that is largely due to an acceleration of economic growth, clearly some credible reform momentum, and lastly, a significant acceleration in earnings growth. Now, if you put that into perspective and we then take the SARS element that you just indicated, we clearly feel that any underinvested international investors in India should use this as an opportunity to buy more Indian equities.
Do you feel it's still, prudent to take, and do you feel that funds, for that matter, that have a big Asia exposure will likely take profits currently in the current scheme of things to come back later once when things start to settle in a bit? So profit taking could be seen even currently.
Only on the margin, really, because when we're looking at the data, what we don't really see is that international investors are overexposed neither to emerging markets nor within emerging markets to Indian equities. So any profit taking would likely only be seen on the margins. And in fact, actually, we think that allocations should start increasing as the year goes by.
Maximilian, if the risk is not contained with regard to coronavirus, and we've already started to witness a risk off trade coming back into this sort of market, gold prices have inched up slightly. You've seen correction of crude oil prices as well. Do you think this as a trend will continue?
We don't think it's going to continue for very long. Obviously, it's very hard to tell at this stage. But again, if we go back to some of the historical areas that we can look back to, SARS being one of them, we feel that this is only going to be a shorter term main concern for markets and likely going to be something that investors with a longer term view should be buying into.
Okay, and you've also indicated your view on Indian markets within the emerging market basket remains pretty much bullish, and I'm sure the foreign investors will be keenly watching out for the union budget this Saturday, which is on 1st of February. What's in the wish list when you interact with the investors who are, putting their money into Indian equities?
I think the biggest wish list is clearly an acceleration of earnings and GDP growth, which in part can also come through what's going to be announced on in the budget, but more importantly also some credible economic reform momentum, in particular with regards to labor market reforms and also the dealing of bad debts in the banking sector. Now we're seeing clearly signs of improvement there. If that is confirmed, if this is becoming more of a credible theme, then clearly international investors will start reallocating greater amounts of their investable assets into Indian equities.
All right, Maximilian, we'll leave it at that. Thank you very much for joining us this afternoon.